Good day. Ira Epstein of Linn and Associates with your metals market wrap-up for this Wednesday, the 27th of May, 2020. And boy, what a crazy time we're all going through, right? I mean, pretty wild. The stock market's nonstop. The NASDAQ is now the one that's leaning back, and it gets pulled along as the rotation continues into the Dow, into the S&P, and believe it or not, even to a degree into the Russell. The money's been coming out of the NASDAQ. I pointed this out to you yesterday. It continues today. As traders now have to ascertain, as everybody starts going back to week, with the first week of June really a big week in America where many states will be open and workers are being called back to work, which is another issue. Because as soon as these checks run out from the government, the question is, what do they face? And some of them are going to face employers that want to reduce their salaries. Some of them are going to face no job at all. We're seeing that there are layoffs happening all over the place, but we're not hearing too much about the small to mid-sized companies. I'm talking some of the mom and pop, and that's what builds our economy. They're the largest employers of the whole workforce when you take it into account, and boy, going to be problems. Gold gave up quite a bit today, and I've dropped the June gold, and we'll be tracking the August. July silver still acting very good. Dollar index slightly higher today, but we're getting a late market bounce in a number of the currencies. When I take a look at the energies, they were down pretty good, and they're continuing to fall in the reopening of the market. API number was terribly bearish, near 16 million barrels, not billion, barrels net build. They took out about 3.5 million out of Cushing, which is still a good number, but now we have to wait for the EIA because the estimates on a net were close to zero. So there's something here still building that isn't the best thing that could have happened in the marketplace. Let's go over to the gold chart and the weekly chart of closes. Now we are off some $48 from this high close, as you can see, with the correction that's been very quiet, but taking place a little bit at a time each day. And when you take a look at this chart, and this is the August gold, I just didn't label everything. I wanted to get this out as I was doing this, otherwise it'd be another hour. I can see how the market's peaked out against these old highs. Now it's coming back into a support area down here. When we take a look at the swing line, we can see the pattern has been, even without today, lower highs, lower lows. I pointed this out yesterday. Then when you look at it and you see how the market today got its down move, and tonight it's still not bouncing much, you keep that pattern as bearish. You're under the 18-day average of closes, so the bias is down. Where's the support in the market? In the August, I think it's 1696, the lower Bollinger Band. You can see the upper Bollinger Band did its job of when you look back at it, because it's so hard when you're up there and you're going, it's going to keep running. I have a reason I tell my subscribers and those that purchase my charting course not to buy over Bollinger Bands or sell under them, and I still think it's good steed to pay attention to. In any case, I see resistance 1734.10. To negate the current downtrend on this pattern, you'd have to take out 1758, and that would not start an uptrend. So, what about momentum? Well, it's measured by the slow stochastic, it's down. So I have the swing line down, the bias down. I see the bears probably trying to defend their position at 1734. But to me, that's a big risk back over that 1758. I don't know how aggressive they want to get. I've switched gears on you from the June-July silver-gold ratio to August gold-July silver. It's doing the same thing. You can see you've made your high back here in the 120s, and you're backing off into the 96 level. And when you look at silver, it's a very different chart picture, at least right now, than gold. You still have the bullish embedded reading, which is the strongest indicator that I know of on a chart. It tells me that the market continues to get bought on breaks by the pros. They'll dump, I think, their positions if you lose the embedded reading. We're getting a little long in the tooth in that, too. You've got to get up and through these highs, and if you don't, the odds favor the market wanting to set back a bit. Here's another positive while I'm saying all that. You're getting a crossover. Do you see the 18-day average of closes? It's now crossed tonight over the 100. So that's a bullish crossover. Trading systems will pick up on that, and that often accompanies, when you get something like that, a new high for the leg of the move. We'll see if that can happen. In the copper market, you've begrudgingly fallen back to the 18-day average of closes. The battleground was the upper Bollinger Band. The market did nothing with it at all, just fell right back here, and it's still a very ugly chart. I don't see anything to do with that. It's not bullish or bearish. In the platinum market, you have the pattern of higher lows, but you also have lower highs. So the market is backstepped into the 100-day average, and it's looking for support there. In order to get to the 18-day average, it would break its trend. You'd have to take out this low right here, and if you're bullish, you don't want to see that take place. So we're not getting a real picture. Going home, who's controlling the market? The bulls, because the swing line is up and the bias is up, but you are fighting price momentum, which is drifting to the downside. You don't have everything together. In the palladium market, you backtracked from the upper Bollinger Band. You only stay over that 5% of the time. And now you have pulled back, as you can see here, into what? That line in the sand, as I like to call it, the 18-day average of closes, and the market came to, if you will, a rest at that point. I did get what I'll call a mini breakout to the upside over here. If we take a look, we had two closes in a row over the upper Bollinger Band. Until this low is taken out, I consider this noise in a market that is attempting to get an upside breakout. Hasn't proven to me that it's done it, but it's attempting it. Dollar index, this was yesterday right here. So as we were dropping down, I said, keep your eye on this. The pros, I think, are going to cover shorts at the lower Bollinger Band to the 100-day average. If the market bounces, they'll look again. Where are they in terms of relation of price and what the oversold condition is if you get back to the 18-day average? This is what you did today. You're too oversold, in my opinion, for the pros to want to step back in and sell this market right here. I see the trend down, the bias down, but you've hit a target, the 100-day average of closes and the lower Bollinger Band. We'll see what the market wants to do with that tomorrow. You know, we write about all this. We have a staff of great writers at Linn & Associates. They work on all these soft markets, the hard markets, the interest rates, the currencies, the metals. And if you like David Hightower, the Hightower Reports, he's out twice a day in our charting software, and he's given updates himself during the day on the gold market, the financial markets. Then we have Terry Rogenson. He's from Hightower, and he's talking about the softs and so on. And of course, we're all covering the interest rate sector, the stock indices for you. So how do you get our information? It's simple. Go to our website at www.iraepstein.com. Sign up for a free trial. They only last 2 weeks, so you're not going to be getting this a very long time. It gives you a flavor of what our customers get. You might want to try our charting software. See, I don't think charting software should just be quotes and charts. It should be an information center, and ours is. From USDA reports right on through the news of the day, the Dow Jones news wires flashing through it, QT News, a whole spectrum that you haven't seen. How do you get it? Go to the website, sign up, we'll take care of the rest. I'm Ira. You have a good day. See you tomorrow.